Hey everyone, Brian Hoops here with Midwest Market Solutions, and this is our Market Minute. It is January the 10th. It's Friday. Crop report has been released, and we're going to look quickly here at a couple of the highlights of the report. But to get a full analysis, my thoughts on this report and how it's going to affect marketings, we will be doing our webinar this afternoon, and I'll get it posted this evening to our website. You can just go to MidwestMarketSolutions.com. You can watch it right there. I'll be sending this link out for it to our subscribers and our clients. But if you're not, you can just follow the links on our website under our monthly webinar. So highlights of the report to me, the USDA was expected to lower ending stocks, expected to lower production, and it really didn't happen for corn and soybeans. Production was raised for corn and for soybeans on a per yield basis, a bushel per acre increase in corn, soybeans a half a bushel increase. Now, the USDA is going to resurvey some of these acres in North Dakota, Michigan, Wisconsin that are behind their harvest. There's almost 3.7 million acres still standing out there of corn and about 950,000 soybean acres that have not been harvested yet. So they could resurvey these, but I don't look for any major changes coming as far as yield. If we're going to see higher prices, it's going to have to come from South American weather or U.S. weather this spring. So, I just don't think there's a bull market coming here in this corn and soybeans, unfortunately. Now, we'll look at it more in depth, and I'll go through all the numbers in the webinar, so hopefully you'll tune in for that. One feature that did stand out was corn residual, feed and residual was increased, and it makes a lot of sense. I thought that going into the report, if you listen to my TD Ameritrade broadcast yesterday, that was one of the things I highlighted that could be bullish. We've got more animals on feed than I think what was expected. They increased demand 275 million bushels for feed and residual. They did lower exports 75 million, which certainly justified because our pace is so terrible this year. And then the other standout was wheat. I did mention as well that we thought winter wheat acres would be down overall, and they were, but soft red wheat Chicago was actually increased, and we saw the hard red wheat areas of Kansas, Oklahoma, Texas, where Kansas City is traded, Kansas City wheat was actually lowered. And so we're seeing a lot of intermarket spreading today. We've seen a big swing in the spreads. Last year, buying Chicago, selling Kansas City was the spread to do. This year, so far, it's been the opposite as acres are shifting, as we saw, as I said, an increase in soft red wheat acres above last year and above trade estimates. Those are the main standout features. Hope you tune in for our webinar. Have a great day. This has been Brian Hoops.